Hello, everyone. Welcome to this presentation, and thank you for joining us on this Wednesday, where today I want to talk to you about your last chance to join a very revolutionary course, in my opinion, something I really feel will take your trading to the next level, and that's our Pi course. It actually starts this week, and this is your last chance to get on board, so I wanted to present this last webinar to give you just a little bit more information of exactly what Pi is. Now, let's talk about how Pi can help you. Let's look at this chart right here. Okay, now this market, as you can see, was initially going lower. Okay, now this is what happens with most people. They'll say that, well, I applied those indicators and it was oversold. It was never been this oversold before. So I'm going to hold on to my position and I'm going to keep on buying some more, actually, because that guy on TV says it actually is okay. So you hold on and then look what happens. Okay, so you lose a lot of money. Ultimately, you get out, most likely down here, because this is where people start to really feel the pain. And just when you get out, this is what happens, okay? Then it starts to go all the way back up. Well, what if there were some type of technique or method that could have kept you out of all of this and only had you buying right here? Well, there is. This is what we're going to be talking about today, and this is the basis for Pi. And I truly believe that this method will save your trading in this year. 2024. So this is the subject of today's educational presentation. This is your last chance to join the live Pi course. And remember, if it seems a little bit difficult, if you're saying to yourself, well, I don't really understand what this is, how am I going to apply this? I haven't been trading for that long, or I'm not that educated with the markets. Don't worry, everything is one click away on our platform, the PTS Primo Charting platform. I developed this with proprietary strategies to teach you how to trade. Welcome once again. My name is Stephen Primo, president and founder of Specialist Trading, and I'm really excited about this upcoming Pi course because this is something that really is, in my opinion, that saved my trading. I did not invent Pi, this method I'm going to be talking about. It was not an idea of mine. It's been around for a long time, but as far as I know, myself and ProTrader Strategies are the only ones to have developed this idea so that it's one click away on a software. And this is what's so beautiful about this. When I had to first learn this method, Pi, this was something I had to calculate by hand and use daily notepads and everything just to keep myself involved. Well, now it's so simple. It's one click away. It probably takes less than 20 seconds on a daily basis to work with Pi. So I'm really excited about it. You'll learn all the ins and outs. We'll give you special bonuses included with that, along with a great discount, which I'll talk about later on in today's presentation. Now, before we begin, as always, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using Pi charts today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Now, for more education on a daily basis, please feel free to follow us on Twitter or X, whatever you like to call it. I post new educational information on a daily basis, upwards of 5 or 6 different postings. And there's lots of great free information on a daily basis. So please feel free to follow us on Twitter or X. Also, we are streaming this live on YouTube. So thank you for all the people watching us now live on YouTube. If you're happy with these presentations, if you like more of them, please click on the like or the subscribe button, and we'll be sure to have them coming to you more and more often. Now, remember, as I stated, excuse me, in the opening statements, we are an educational company. This is an educational presentation with one goal, and that's simply to teach you how to trade. If there's one thing I've learned in my 47 years now of trading, it's that most traders lose because they've taken themselves out of the game. They are no longer making their own decisions. What they're doing is listening to someone make their trading decisions for them. I mean, think about it. How do you make your trading decision? Do you read a blog, a nightly blog that someone posts about what they feel the market or some certain stock is going to do? Do you belong to a trading room or a chat room where they tell you what you should buy or sell? Or do you listen to the guys on TV after the market closes tell you what to buy or sell? Or do you just depend too much on fundamental news like earnings, interest rates, jobless claims to tell you if you should be buying or selling? This, in my opinion, is what leads to so many traders' losses, because when you rely too much on these outside sources, you're basically telling the markets, I don't know what to do, please tell me. And I don't know of any other endeavor, any other job or any other career where someone would say, please tell me what to do. I don't know how to do this. Can you tell me what I should be doing? If I'm a airline pilot or a surgeon, tell me what to do. But traders do this on a daily basis. You're always going somewhere to find out what someone likes or doesn't like. All right. My goal is to teach you how to trade with the same edge that was taught to me some 47 years ago and what has sustained me now, so that ultimately you can sustain yourself. You shouldn't be relying on an outside source to make your decisions. You should learn from these sources, but then take that information to make your own decisions. And this is the service we provide here at Specialist Trading. Now, we have a great educational presentation. We have a good crowd here today. A few things I just want to say. If you have any questions, please wait till the very end. I'm sure you will have some questions, but often your question is answered on the very next slide. Also, this is being recorded. If you have to leave early or if you'd like to watch this again, don't worry. Each and every one of you will be sent a link to this recording so you can watch it at your own leisure, okay? So kindly, if you have any questions, please wait till the end of class. With that stated, let's begin today's educational class. And we're going to be, once again, looking at the way most traders trade. So let's look at that original chart, or actually this is another chart we're looking at. This is an older chart in Tesla, okay? So let's take a look at this. Let's say you were thinking about buying Tesla. This was back last year. And you say to yourself, well, you know, I went to that chat room and that guy says that this is in a downtrend. And so I'm pretty much going to stay away from it. It's making lower lows, higher lows. So I don't really want to touch this at all. So you stay away from Tesla. And then look what happens. It takes off, right? So you miss it altogether. All right. I'm sure that's happened to a lot of traders. Or what about this? Let's say you're long the British pound. All right. And you feel okay. Nothing really much is happening. You're saying to yourself, well, it's not going down. It's not going up either. But I'm okay. I'll hold on to this position. I like this a lot. And then all of a sudden, it falls out of a bed in an extreme downtrend. And you're holding the bag and you're saying to yourself, when is this going to end? Finally, when you can't take it anymore, you sell, most likely right around here. And that's when it firms up and starts to go back up, right? Look familiar? Or what about this? Here's a chart of the Dow Jones Industrial Average. This was going back just a few months ago. All right. Let's say you didn't like the markets, but you didn't know if you should get in short or whether you should stay out of the market. And you go to that chat room and that guy says, listen, we're going to have a bounce here. On that bounce, you should sell because the market looks terrible. And probably at the end of the year, we're going to have a nice sell-off. So you say to yourself, okay, I trust this guy. And we do have a little bounce. So at this point, you decide to sell and you're all excited. You think you've sold towards the high of that little bounce. And then look what happens. It just keeps going higher and higher. So there's one common denominator with all of these problems, with all of these situations and scenarios I just shared with you. The problem is the trader is out of sync with the market. When you think something should go down, that's when it stops and goes up. And when you think something should go up, that's when it keeps going lower and lower. So see, the problem is we have to be in sync with the trend. And this brings us to Trading 101, which all it says is the trend is your friend. We've all been taught this at the very beginning of our trading career, right? The trend is our friend. We have to be in sync with the trend. The only trouble is everything, every website, every trader, every educator has a different idea of how to determine what the trend is. Now, some say, well, it's moving averages. Once these moving averages cross, that tells you if you're in a buy or a sell trend. Another one will say, no, it's taking two different time frames. The two different time frames have to be in sync. The higher time frame, let's say a daily, and then a lower one, an hourly, have to be in sync. Then that's the real trend. Or someone else could say, oh, no, it's patterns, higher highs, higher lows. That tells you what the trend is, okay? These are all well and good, but at Specialist Trading, I think we have the best trend trading tools because that's all our focus is on. So let's go back and look at that chart. Remember, we're looking at Tesla. Remember, and we said, well, this is in a downtrend. We're not going to do anything. And it took off. Well, let's use the first tool that we teach all of our students to apply. And we call this the buy-sell line. This is the very first thing we teach all of our students around the world. And you can see right up here in the upper left-hand corner, we made it simple. That's our buy-sell line tab right there. What we want you to do is simply click that on and click on 50-period simple moving average because that's all the buy-sell line is. It's the 50-period moving average, but it tells us whether we should be a buyer or a seller. So the way this works is when you see consecutive bars close below the buy-sell line, the market's telling you it wants to go lower. Not some guy in a chat room, not some guy on TV, but the market. It's telling you, I want to go lower. And look what happens. It does go lower, all right? Now, if you want to avoid this market, you can stay out. But look what happens once you have consecutive closes above, right here. The market, not me, the market is telling you, I want to go higher. And so right here, at this point, if you had seen this in Tesla, you wouldn't have had to wait for some guy in a chat room to tell you. You could have said, okay, the market wants to go higher, and then taken advantage of this nice big run. You see how simple this is? And guess what? You don't have to purchase anything. Most likely you have the 50-period moving average already available on whatever platform you're using. This is what we call the buy-sell line, all right? That's a very simple way to determine the trend, but a very powerful one. You should always have it on whatever chart you're looking at. Let's look at that other chart, the British pound. Remember, we were long here, and then it just kept going lower and lower and lower, and some guy in a trading room was telling us, well, no, it's going to bounce here. It's going to bounce. Finally, when you couldn't take it anymore, you got out. That's when it did bounce, all right? So how could one of our trending tools have helped you? Well, here's our second tool. We call it the PTS XT. What it does is identify only extreme trends. So even though there may be a nice, slow trending market, it doesn't do anything. But when there is an extreme trend that is detected, that's when it paints a block, a colored block around the bars. If you have a yellow block painted around the bars, it's telling you you're going to be in an extreme uptrend. But when you have a reddish orange block, such as we have here, that's telling you in advance that most likely you're going to be in an extreme downtrend, okay? Now, this is not something that looks back in hindsight and repaints. It happens in real time. So after this very first bar here, you would have seen a reddish orange block around this one bar. This was your signal to sell. Now, you could have either exited your position or maybe even gone short. Either way, you didn't want to be long, and look what happened. You would have saved yourself all this money because you were in sync with the extreme trend. Now, once price leaves the block, as it did right here, that's telling you that the indicator is saying that we are no longer in an extreme downtrend. So most likely you want to exit your sell position or maybe start to look to enter. So you see how this tool could have helped you tremendously. Remember, these tools are not form-fitted. They do not change and recalculate. They will happen in real time. Now, lastly, let's look at that chart of the Dow Jones Industrial Average. See how we can get back in sync. Remember, we were determined that this was a really bad market, and some guy in a trading room told you to sell on the bounce, right? Well, how well did that happen? Well, let's look at one more trading tool we have. We call this the PET-D. This is something that I first learned on the floor of the stock exchange. If we look at our green strategy tab, it's right here. You click on PET-D, and what happens is it changes the bars automatically from red to green. If you are colored red, if the bars are colored red, I should say, that's telling you the current short-term trend is down. If you get 3 bars together colored green, that's telling you that the trend is up. So obviously we had consecutive bars closing here red, but what happened right here? We had 1, 2, 3 green bars. So after we concluded this downward trend, the market told us by this translator, the PET-D color bar tool, that it wanted to go higher. Remember, this is all the market translating to you. None of these tools are done by fundamental news or our personal opinions of what we think the market's going to do. This is all the market telling you what it wants to do. So when you saw 3 consecutive green bars right here, that was your sign that this is not just a bounce. We're most likely going to go higher, and you could have taken advantage of this nice run. So as you can see here, the trend is everything. The trend is what stands in your way from success, because most traders are out of sync with the trend. I mean, it stands to reason. When you're losing money, you're doing the opposite of what the market wants to do. You're out of sync with the trend. And when you're making money, when you're successful, you are doing what the market wants to do. You are in sync with the trend. Now, these same trending concepts can be applied to virtually any chart. Doesn't matter what market, doesn't matter what time frame. For example, let's look at this chart right here. Now, obviously, this market was headed higher, but it looked like it had some type of reversal here and then went extremely lower, okay? So how could one of those trending tools have helped us? Well, let's apply the color bar tool, the PET-D, which you just looked at. Remember, if we have consecutive bars of the same color, that's telling you the trend. But once you get 3 bars of the same color, that's telling you the trend has changed. So if we apply the PET-D, We see here that the majority of the bars were all green, right? Until right here, we had 3 red bars, 1, 2, 3. So this was telling us that this market wanted to go lower. So that was our signal either to exit this or to bet on this going lower. So this would have been a nice trade, right? Well, unfortunately, this wasn't actually a stock or any particular market. Guess what this was? As it went down, the PTS correctly predicted California COVID cases in 2021, 3 years ago. So isn't it amazing that this was not a stock? This was not a market we're trading a forex chart, crypto. This was just a daily accountance of the COVID cases in 2021. And right here, using the PTS, it adequately signaled that COVID cases were going to be going lower until we would have found 3 consecutive green bars, which we never did. Okay. Let's look at another chart. Now, obviously, this next chart, this market went straight up, right? Wouldn't this have been really nice to buy somewhere around here? Well, let's see how once more, one of those trending tools could have helped us. Let's apply our basic buy-sell line, which is a 50-period moving average. Now, price was originally below the buy-sell line, but right here, we had consecutive closes above, right here, okay? Now, this is the market telling us it wants to go higher, all right? So, see how simple this is. We could have initially jumped in and bought this market right here and taken advantage and made a lot of money. The only trouble is, this is not a stock, this is not a market. Even though it went up, this is a chart of the Atlanta Braves wins and losses for 2022. So every time the Atlanta Braves won a game, it got an up day, positive plot as an up day. Every time they lost a game, it was a down day. So what are we trying to say here? This is funny because we were looking at stocks and cryptos and British pound and ETFs, but now we're looking at COVID cases and the Atlanta Braves wins and losses, and the same techniques apply. So here's what we've learned so far. Everything can be charted. It doesn't matter if it's a stock. It doesn't matter if it's COVID cases. It doesn't matter if it's the weather. It doesn't matter if it's a sports team. Everything can have a chart. And if everything can be made into a chart, every chart will produce trends, okay? Just like a stock that you've been looking at for years. It doesn't matter anymore that we have to look at Apple or at Tesla or at the S&P 500, because everything can be charted and every chart will eventually produce a trend. So this brings us to a method that I truly believe will save your trading in 2024. I know personally because it saved my trading. When I first started trading some 47 years ago, I first learned about this method. Now we've developed it, Pro Trader Strategies and I. In fact, it's taken so long to put together because we wanted to make it as simple as possible. It's taken 5 years in development, but I'm happy to announce that we're finally able to release this to the public, and it's called PI. It's abbreviation for Patterns in Equity, okay? So what exactly is PI, all right? How is this going to save your trading? Well, let me start out by sharing with you what PI is not, okay? PI is not an indicator, all right? It's not an indicator that tells you when something's overbought or oversold. PI is not a system or a strategy. It doesn't generate buy and sell signals. It doesn't tell you this is where you buy, this is where you sell, this is where you place your stop. It doesn't do that. PI is not AI. It has nothing to do with artificial intelligence, okay? So you can get that out of your mind right now. It has nothing to do with that. And finally, this is really part of the personality of what PI is. PI does not care how you trade. And what does that mean? Well, PI does not care if you have a system that you've developed yourself. PI does not care if you don't have a system, if you just trade discretionarily. PI doesn't care if you make your decisions based off the full moon. It doesn't care if you make your decisions off of fundamental news like jobless claims. It doesn't care. It doesn't care if you're an intraday short-term trader. It doesn't care if you trade tick charts. PI doesn't care if you trade only monthly charts. It doesn't care if you trade crypto. It doesn't care if you trade British pound or currency pairs. It makes no difference what or how you trade. That's the beauty of it. You have all this weight lifted off your shoulders. How many times have you thought, well, what market should I trade? I don't know. I'm more of this type of a trader. It doesn't matter. You can trade anything you'd like, any system, any method. It doesn't even have to be one of mine. All right, so what exactly then is PI? Well, what PI does is it monitors your performance. You see, it doesn't care where that performance comes from. It doesn't care if the performance comes from a crypto strategy. It doesn't care if it comes from an intraday E-mini strategy. It doesn't care if it comes from a fundamental strategy. It doesn't care. All it does is it wants to monitor and analyze your performance, because that's all that matters, right? If it's working, you'll have positive performance. And if it's not working, you'll have negative performance. So what Pi does is it analyzes that performance, and that's what you'll trade. I know someone could say, what do you mean that's what I'll trade? I'll trade my strategy, right? I mean, my strategy that's based off of patterns or based off some indicator. Well, no, with Pi, your performance is your strategy, and vice versa, your strategy is your performance. So if this sounds confusing, let me show you how to apply the Pi process, and you'll see it's so much more simpler than you thought, okay? Let's look at 3 actual pie charts that I've constructed for you so you can understand this. And remember, it may seem a little difficult now, but it's very simple, and everything is one click away on the PTS Primo charting platform. All right, let's go with strategy A. Now, this is actually a method that I just made up. I, in fact, put in most of the opposite things that I teach. I put in fundamental information. I put in actually the opposite, buying below the buy-sell line, selling above, all these things that I would never teach a student. And these are the results if I traded 100 shares on a particular market using this strategy, okay? Now, obviously, in the beginning, since it's based on parameters that I don't normally use, look at the terrible results that were generated here. This is the chart of my profit and loss. This is not a chart of any stock. This is my performance. So in other words, on this day, I lost a lot, and this day I made a little, I lost more. So over time, this is about a 6-month performance. And over time, I lost a lot of money. But at this point right here, things changed. Either the market environment changed, or maybe just the strategy started to kick in and started to do pretty well, okay? Now, if you recall, this was the very first chart I began the presentation with. And this was not a chart of a market. This is a chart of my performance paper trading this particular strategy. All right. So what happens if I started trading this strategy from the very first day to roughly about 6 months later? What would the results have been? Okay. From here to here. Well, here are the results. The total number of trades were 188. So I traded 188 signals 188 times. My worst drawdown, meaning my worst slump, which was right here from very first time beginning to trade to at this point, was I would have lost $8,641, okay? That's a lot of, that, you know, even for someone who's been experienced a long time, that's a lot to take. That means at one point you were in the hole, roughly over $8,600 you lost. Now, at the end of that 6-month period, right here, when I stopped trading, my total profit and loss was only $2,015. So I came back, as you can see, the strategy came back, and when I quit trading here, I quit trading with a $2,000 loss because I just wanted to get out, let's say, okay? So not very good results, right? Remember, this is not an actual stock. These are just the P&L charts. This is just the performance of what this particular strategy did. So how could Pi have helped us? Well, remember, as we said, Trading 101, you can chart anything, right? And what did we chart? We charted our performance, our profit and loss. And every chart will eventually generate trends. So obviously, we want to be trading this strategy when it's trending upwards. How could we have done that? Well, let's use the simplest of all methods, the buy-sell line right here, okay? We'll click on the buy-sell line, and it's the 50-period moving average. So the same way we would apply this to a stock, where we're saying we're not going to trade the stock, Apple, Tesla, whatever it is, the market, when it's below the 50, we're going to do the same thing with our strategy. As you can see, we've been below this entire time. So we're not going to trade it. We're just going to paper trade it. And every time the strategy generated a signal, we'll act as if we traded it, and we'll plot it. We'll plot the profits or losses, but we're not going to actually trade it with real capital until we have this point right here, just like we taught you before. When you have consecutive bars closing above the buy-sell line, the market you're looking at, regardless if it's a stock, crypto, or your performance, is telling you it's time to get in. Now, just like you would get into a stock, you're not going to get into a stock. You're just going to trade this strategy because the strategy now is in an uptrend. So at this point, you would have traded your strategy beginning here to at this point right here when it went below the 50-period moving average again, okay? So we would have missed all this. We would have paper traded it and just plotted it on the chart, and then we would have started trading right here from right here and gotten out right here. So what would the results have been if we used pi, meaning that we traded with the trend? Well, let's look at them. Our total number of trades now is only 99 because we only started trading right here. Instead of started trading from the beginning, we waited to see that we were in an uptrend. So we've decreased our trades by 50%, nearly 50%. That's not a bad, that your money's not tied up. You don't have cash tied up. You have more money to work with. And so you're not using a lot of tied up money in the markets. All right, here's the most impressive thing right here. The worst drawdown, meaning our worst slump, was only $1,500. We went from originally losing over $8,600 to now, when we were trading this strategy, the worst slump we had was we were losing $1,500. That's not a bad little drawdown. I think that most acceptable. Most people could afford that. And look at this dramatic change. Now our total in profit and loss, where originally we switched and stopped trading with a loss of $2,015. Here, trading from here to here, we now have a profit of $3,600. So we had roughly about a $5,000 switch. Isn't that amazing how just by charting your P&L, your performance, that turned into your strategy, meaning that tells you when to trade and when not to trade. Not when the market is supposedly in good news because earnings came out, or not when the market is down because some bad jobless claims number. No, we don't care about that. All we do is plot our strategy, whatever it is, and when it goes into an uptrend, that's when we start trading it. That's the simplest way to apply pi. Let's look at another example. This is actually a strategy that I trade. This is strategy B, and this is an E-mini future strategy where I traded one contract, just trading with this, one E-mini contract, a micro mini, I should say. But just looking at this very simple strategy, which is based on strategy number 4, one of our strategies, look how well it did, okay? So if I had started trading from the beginning and exited right here, which is roughly about 3 months, from beginning to end, what would my performance results be? Well, the total number of trades would have been 75 trades, okay. My worst drawdown was $1,500. That's admissible. Most people have $1,500 that they can risk in the markets over 3 or 4 months, okay? And my total profit, only trading with one contract, was $4,500. So it's roughly about $1,500 a month, $4,500 after 3 months. Not a bad little strategy, right? And this is only trading one contract. You can always trade more if you like. But remember, pi says we only want to make sure we're in when there is a trend. All right, so let's use another one of our trending tools. In this case, we use the PTS XT right here, and that's looking for an extreme trend. And remember, it paints colors around, or a color block around the price bars when it tells you that most likely you're going to be going into an extreme trend. The reddish orange block is around a downtrend, and the yellow block is around an uptrend. So once we apply that, well, look what happened. Right here at this point, off this one plot, that was already determined that most likely we're going to be going into an extreme uptrend, okay? Remember, this is not Apple. This is not Dogecoin. This is not the S&P 500. This is the P&L chart of my performance. So I was basically paper trading right here until I got to this point where I saw this yellow block. That would mean I would start trading right here, and I would, as long as it was in the yellow block, I would continue trading till price bars exited, all right? So let's see the statistics, how well this would have happened. And by the way, pi generates these statistics with one click. I'm just showing you this, but with pi on our interface on the platform, with one click, you'll see these statistics automatically come up. All right, so using this from right here to right here, my total number of trades was only 50. So I cut my number of trades down by a third. All right, not bad. Once again, not tying up your money in the market as much. My worst drawdown was decreased by 2/3, only 500. Okay, so I only lost 500. That's very minimal, right? Trading intraday E-mini futures. And lastly, my profit and loss was just a couple of $100 less. Okay, where here originally I made 45. Using this, I only made 4,300. Okay, a couple of dollars less. Now, here's what most novice traders would say. They say, well, why would I trade this using pi when I can pretty much get the same results? I would have made $200 more. I don't mind risking $1,500. I've got a $10,000 account. If over 3 to 4 months, the worst loss I ever had was $1,500, that's fine. I can risk that. So why would I trade using pi, or why would I care about this? Well, let's look at the drawdown. Here's another way in which to look at this. This is more of a professional way, because if you're willing to risk 1,500 here, all right, and you only lost 500 here by just trading when bars were in, then if you're willing to risk 1,500, then it stands to reason that you could increase your share size, your contract size by 3 times, and you would still have a worse drawdown of 1,500. So in other words, if we increase this contract size to 3, well, our worst drawdown now would have been 1,500 because we're trading 3 contracts. But guess what? Our total profit and loss would have increased by threefold. Now, with the same drawdown, with the same risk of 1,500, our profit went from 4,500 to 3 times, which is 12,000, roughly 12,900. So you see how this could help us. So once again, not just looking at your profit, but looking at your drawdown, how that could help you. And this is all one click away on the PTS Primo Charting platform. Now, I want to share with you something I've created just for this, and this is an extra bonus here, strategy number C, or strategy C, I should say. And this is something I'm going to share with you now live on the PTS Primo Charting platform to show you how simple it is. And we'll be covering this actually in the class, which I'm going to be presenting very soon. So let me toggle over and share the screen over into the PTS Primo Charting platform, okay? Hope you can all see this. This is a chart of the S&P 500 index. It's the GSPC on our platform, initials. And we're going back a year, going back to 2023, all the way up currently up until this last week, okay? All right, so what we've done is we've applied the buy-sell line a completely different way, because we have this on our platform. We have different ways to apply it, but this is the 50-period moving average. And once again, we want to be buying when price is above, we want to be out when price is below, and we want to be back in when price is above, okay? See how simple this is. You could apply this to any market, whatever. But how could we apply this with pi? Well, here's another innovative way to apply pi. So what we did is we created a buy-sell line index chart, meaning that every time a price bar, a daily price bar in the S&P 500 closed above the buy-sell line, we gave it a reading of +1. And every time it closed below, we gave it a reading of -1. And this is the result right here, the same time frame from the beginning of January 2023 up until now. So you see how simple this is. You see how this can help you, because now, looking back at that chart, you see all the peaks and valleys, all the fits and starts going up and down, up and down. But once we apply this buy-sell line, just making it into a binary chart, look how simple it is. It's showing you the uptrend, and then showing you once you have charts, or I should say a consecutive down days, you have a downtrend, and then you have the uptrend starting once again, okay? Let's take this last period from roughly, let's see, September, beginning of September, when it went straight down, to beginning of November, the first week of November, where it went straight up, okay? So let's reduce that now. Here's where we are. Here's the beginning of September, where the market went down. Look how simple this would have been if you had access to this. You see, looking at the S&P 500 in the same time frame, look at how the market was choppy, up and down, and how it had these bounces, and you would have said, hey, we're going up higher, and then it goes much, much lower, right? That really gets in traders away, this noise, what we call. But once you look at the buy-sell line chart, it was telling you the whole time the market is going lower. So this will give you the confidence to look at the market, and once again, you could apply a strategy to this. Let's say one of our strategies, strategy 4, and even though it looked like you may have had a little bounce here, remember, once again, this was going lower the entire time, and it gave you the confidence to take these signals, such as we have right here. Now, look what happened at the end of October, beginning of November. The market started to head higher, all right? Now, should we sell again because it worked these other times, right? Well, not really, because look at what happened. Let's go back to the buy-sell line. Right here in the first week of November, we had consecutive up days. One down day, not good enough, but now consecutive up. This was telling us, once again, the market wants to go higher. So now this rally we've had since beginning of November, do you think that tool could have helped you? Look how the market has increased and how it's gone continuously higher all the way up until this past week, okay? This is what we're trying to tell you, how the power of it is. You could have been using a chart like this, and you could have applied any one of our different methods to get you long while we were going higher, as you see right here. While this was up, you didn't have to worry about fits and starts in the market. You could have continually just had the confidence to buy, okay? Now, the market is starting to look a little weak. Is it falling out of bed? Is the buy-sell line chart changing? So in other words, are we going to have consecutive down days coming up here? Wouldn't you like to know? Well, don't worry. We're going to be talking about this to all of our students in the Pi course. So you will get access to this chart once you become a student of mine in the upcoming Pi course. And this can help you tremendously with your own trading, at least give you a fair idea of what the markets are doing and make it extremely, extremely simple for you. Okay, so do you now see the power of Pi? Remember, let's go over what we talked about. The advantages of Pi is it doesn't care what strategy or market you trade. So there's no need to say, well, I don't have a strategy that is based on this. I like to trade fundamentally. Okay, doesn't matter. Or I don't even have a strategy. It's okay. We can teach you things or give you things in which to buy or sell. All it cares about is the performance. Pi is designed to enhance your trading results. It's simple and easy to apply. It can be used with all the studies on the PTS Primo charting platform, all the strategies, all of the different trend indicators you can apply to Pi. And Pi can be applied to all data. Here's the extra advantage of Pi. You can apply it to weather. Say you like to track the weather in your off time. You're interested in weather patterns. Gas prices, if you like to track and see where gas is going. Weight loss. Let's say it's the beginning of the year, and like so many other millions of people in the beginning of the year are trying to curb their weight and get back into shape. You can track your weight loss. Just simply put in the number of how many pounds you're gaining or losing on a daily basis. And ultimately, sports. There are so many people that are interested in timing sports, in games, in spreads, in all different types of fantasy games. You can track this. It doesn't matter. Remember, as we said earlier, everything can be charted. It doesn't matter what it is. Everything can be charted. And if you can create a chart, then every chart will produce a trend. Once you know the trend, you see the importance of learning how to decipher and know when you're in a trend, either up or down, then you can trade it. Doesn't matter what it is. Now, in closing, remember, what Pi does is it tracks and analyzes your performance. So therefore, you don't have to worry about whether your strategy is making money, because your performance is your strategy and your strategy is your performance. That's the way you look at Pi. So isn't it time you take your piece of the pie? This is what saved my trading 47 years ago when I first learned this concept. I have been using this on a daily basis. In my opinion, it's the next stage in your evolution as a trader. Take your piece of the pie and come on board, okay? Now, I'm happy to introduce our Pi course, which is beginning this week. It's our brand new course, taken over 5 years in development because we wanted to make it simple. You're literally having all this one-click access away, and you'll only find it on the PTS Primo charting platform. So we're going to have a 2-part live class beginning this Friday. We're going to include extra bonuses. And guess what? One of those bonuses is the chart I just shared with you. Each and every one of our students will get a chart of that on their Pi interface of the buy-sell line. So we'll show you how to update it on a daily basis. Easy and simple, take you probably less than 5 seconds to do on a daily basis, and you'll have that access to you. That's an extra bonus. Remember, you can apply it to anything: weather forecasting, weight loss, even sports, okay? Now, on top of this, remember, this is a live class. It's set to begin Friday. That's Friday the 19th. So start 2024 off in the right direction. Get on board with Pi. As far as I know, no one in the entire world is having or has a course like this at Pi. This is the only place where you'll find it. We're the very first people to do this and to construct our platform that enables you to chart and use this, okay? I've only shared with you the tip of the iceberg. Come on board with Pi. Now, for more information on how to become a student of mine for classes beginning this Friday, contact Pro Trader Strategies. I would highly recommend giving them a call at area code 310-598-6677. They have a good discount going on for early birds trying to sign up now. We have a lot of people that like to sign up the day of the class, but if you sign up prior to that, I know they have a great discount going. You can ask them about pricing or about establishing some type of a small payment, and then you can be up and running with a payment plan and just pay on time like that. But either way, you want to be on board for the live classes, because the live classes we're going to be keeping to a minimum. And once we start the live classes, that's it. We're not going to do them live anymore. And with the very small live classes, they're intimate, and you can ask questions live to me over the internet, and you can see live charts, and we'll be discussing and talking to these things, and you'll be able to interface and use your pie charts at the same time. So this is a really great educational class. It's going to be live starting this Friday. So please, if you're at all interested, contact Pro Trader Strategies. Okay. Now we have a few minutes left for any questions. If you happen to have them, go to the either to the chat box or to the question and answer. Oh, I see I have one already right here. Someone is asking, when is the class this Friday? The class is scheduled for 10 a.m. That's Pacific time. We have found over time, because we've been doing this for 15 years, when we have courses, that seems to be the best time for everyone, because that way, if we have it on Friday, it gives them the whole weekend to experiment with and to use, and then they can come back with questions. And so unless everyone in the class wants to change it to a different time, I've done them on Saturday mornings, even on Sunday mornings. I've also done them before the market opening, also after the market closes. Unless we want to change, 10 o'clock Pacific Standard Time seems to be a good time. That's 1 o'clock Eastern Time. So that's when it'll be, okay? Someone's asking, how long are these? Usually anywhere from 1 to 3 hours. So let's just say on average, a couple hours long. And remember, there are going to be 2 classes, one this Friday, and if nothing changes, it'll be the next Friday as well, which I believe is the 26th. So they'll each be about 2 hours long on average. It'll be question and answers, and they'll be more intimate than these live classes that we have now that you see I do every Wednesday, in that we'll be able to stop and ask questions and look over charts and take our time so that everyone understands, okay? Good questions. What if you can't attend? If you can't attend, but you are a student, don't worry. They will be recorded, and each and every one of you will receive recording so you can study at your own leisure. But remember, you'll always get my personal email address where you can contact me. So even though you're not able to go to the live class, you'll be able to contact me via email, and I can still answer the questions just as if you were in the live class, okay? Okay. Yes, that's this Friday, the 19th. Once again, last time, Friday the 19th, this coming Friday at 10 a.m. Pacific Standard Time. Remember, if you're interested at all, you want to establish a payment plan, you want that discount information, contact Pro Trader Strategies. They have trading consultants manning the phones right now. They'd be happy to give you more information. Call area code 310-598-6677. Now, as we close, I just want to say thank you so much. As you can tell, I'm very excited about this class. Once again, this method, PI, has changed my trading. It saved me, and I really think it'll be able to do the same for you. So as we take one last look at the disclaimer, I want to thank you so much for taking time out of your Wednesday, but most especially, I really hope you can join us this Friday in the PI course, okay? Thank you so much. I'll see you next time. Bye-bye.